What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol TSLA for Tesla Inc., of course. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We talk about the stock regularly here on the channel. I want to point out that if you look at the daily bar, right, we did talk about the fact that, sure, the hammer candle would suggest bullishness. However, we're not really out of the woods in a lot of these mega cap companies until we recapture the flush point. In Tesla, we've been discussing 1,000 for quite some time now. So if you were to smash the two daily bars that we've gotten now, Monday and Tuesday, together, what you would be left with would sort of be a body that looks like this, an upper wick that looks like this, and a lower wick that would look something like this. Now, don't get me wrong, it is still a longer lower wick than upper wick, but it's starting to become a bit more of an indecision doji as opposed to a pure hammer candle. So with that being said, I think there's a lot of indecision, quite frankly, as the candle indicates. And, the big elephant in the room also is just the fact that we have earnings tomorrow after the bell. So all of that being said, I think it's going to be extremely difficult to trade this unless you're an intraday scalper with all of these unknowns. Again, the candle structure is looking a little bit shaky, as well as the earnings catalyst. It's just a 50-50 shot on whether or not it's higher or lower. Someone out there is going to claim, oh, I know it's going to go higher, and if it happens to go higher, they're going to look like a genius. And if they, say it's going to go higher, but it actually goes lower, they're going to say, oh, it's an earnings announcement. No one really knows what's going on. So take that with a grain of salt if anyone's telling you what way they think earnings will be going. At the end of the day, in my experience, it's usually 50-50. You never know whether or not it's going to be good or bad, even if the news is good or bad, quite frankly. So with all of that out of the way, we can look at the 30-minute time frame just for a little bit more information here. And what I would start to point out is that from today's session, a number of critical things actually did happen. So we have lows, we have higher lows, and now we've continuously built higher lows. So from a short-term perspective, yeah, the trend is starting to, reconfigure itself to the upside. The other thing I would point out is that this pullback here held on to the neckline breakout from yesterday that we talked about close to 900. So again, another bit of a bullish indication. Now, don't get me wrong. We have seen a little bit of a pullback into the afternoon here, and we're currently trading a little bit lower in the post market there, 913, 914. So it's not to say that the trend has to continue higher, but the hallmark signs of the beginnings of a new uptrend are certainly here on the smaller time frame chart, the 30-minute, which we're specifically looking at. The next breakout would be the recapture of this gap fill area, the 943, which we clearly resisted off of into the end of the day. If that happens, we know it's open doors up to about 1,000 even, which, as we pointed out from the daily, is the all-important number. If this breaks down in tomorrow's session, it's got to be a flush underneath this area, 900, to get us closer to the prior day's lows, Monday's double bottom at 855.25. From there, I would reassess the chart, but please just don't forget that earnings are around the corner on this, and anything can happen after that number comes out, so we'll take these levels with a grain of salt. If you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.